Hello, my name is Brian Nielsen. I am um, doing my presentation on mortgage financing. I'm from Denver, Colorado. My major is business management with an emphasis in marketing and finance. So I'm pretty excited to be doing this presentation today. Um, I actually ended up learning a lot through all of this. I'm still a little bit fuzzy on some things, but I'm gonna keep on keeping on so I can learn a lot more. But so to start out, um, for the first slide, I just wanted to show kind of what is mortgage financing, or what is a mortgage. Um, Online it's defined as a debt instrument secured by the collateral of specified real estate property that the borrower is obligated to pay back with a predetermined set of payments. So in my mind, before a mortgage, the only time I'd really heard anything about it was in Monopoly, when you buy the property and then you mortgage it so that you can get more money to play with, and someone else owns your property. So it's honestly kind of like that same thing. So in a mortgage, when you get a house and you don't have all the money to pay for it at once, you get a mortgage. So the bank will lend you the amount that you need to buy the house, and then you will go consequently paying them back um, for the amount that um, that you decide on every single month. So it's, like I said in the slide, it's the primary mechanism used in many countries to finance private ownership or residential commercial property. So most people do buy mortgages when they start trying to own property or whatever, because people don't have that much money to buy. So they have to do it through the bank, and like I said earlier, through um, allocated payments. Mortgage loans are generally structured as long-term loans, because if you could pay it off quicker, you could just pay it off in cash and you wouldn't need any help from the bank. Um, so that is what I thought was most interesting. Really simply, over a period of many years, the borrower repays the loan plus interest until he or she owns the property and is free and clear. So that is what a mortgage is. The current situation on mortgage loans is actually the the mortgage rates are going down consistently. Here's a graph that I found on Wikipedia, actually, starting in 86 to 2010, about the mortgage rates going down. So this is the amount that you have to pay um, per per payment, like it's the interest rates. So right here, also going along with the current situation, these are the current mortgage rates. So whether it's a 30-year fixed rate or a 15-year fixed rate, the rate will be higher for the longer amount of time, because you don't have to pay as much money up front. Each payment you'll pay smaller and smaller, except the way that they get you is with the interest rate being higher. So in actuality, the quicker that you can pay it off, the less money that you're going to have to end up paying overall. So I think that's really interesting. So if you do have enough money, it's a lot better in the long run to pay it off quicker. Something I thought was really interesting right here was what a jumbo loan was. So I looked at the definition of a jumbo loan, and it said that it is a mortgage with a loan amount exceeding the conforming loan limits set by the Office of Federal Housing Enterprise Oversight, and therefore not eligible to be purchased, guaranteed, or securitized by Fannie Mae or Freddie Mac. So it's just a huge loan. I would think it's on a giant office building or something. Last but not least, future possibilities. I thought it was really interesting. In Boulder, Colorado, they're doing this thing called down payment assistance, which means if you're a new home buyer and you don't have enough money to start out, there are people in the community, and they'll help you with the down payment so that you can come live in their neighborhood. I thought it was kind of cool for the future. Also, people are starting to mortgage their homes and take money out that they've been using for their homes to pay for their children's education, and they can just keep paying for their homes after. Also, there's a new thing with Congress requiring lenders to retain 5% economic risk as they sold mortgages, so that they'd have kind of skin in the game. So that was my presentation. Thank you so much for watching. It went by really quickly.